Hello and welcome to Ava Talks Crypto. I'm Ava, and I'll be bringing you all the latest and hottest news happening around the world that affects the crypto space. For our headlines today, Bybit exits Canada, citing recent developments in regulatory rules. Central banks in Hong Kong and the UAE collaborate on crypto rules. Coinbase CEO states that China has the most to gain from the restrictive crypto regulatory rules in the United States. Deal made to avoid a US debt default will scrap the proposed 30% excise tax on crypto mining. Before we begin, please support our channel by subscribing and giving this video a like. Doing these simple things helps us a lot, and it also encourages us to make more informative videos on crypto for you to enjoy. You can let us know what you think by commenting below. Also, you can share our videos with your friends who may also be interested. Lastly, you can hit that bell icon to get notified whenever we release new videos. For our first-time viewers, our channel provides all the latest and hottest news happening in the crypto space. For those of you looking for a more comprehensive analysis of the crypto market, we also release daily market report videos that contain crucial information and trade strategies for Bitcoin, Ethereum, and trending altcoins. Now, let's discuss the latest headlines. To start things off, we're going to take a look at Bybit and why it's exiting Canada. Only recently, crypto exchange Bybit announced its exit from the Canadian market, starting as soon as the end of May. According to a spokesperson from Bybit, the reason for their exit is mainly because of the recent regulatory developments in the country. Bybit is one of the several crypto firms that announced that they would be exiting Canada. Bybit posted on a blog on Tuesday that it has always been the company's primary objective to operate their business in compliance with the country's trade rules. Unfortunately, in light of the recent regulatory developments in Canada, Bybit has made the decision to pause the availability of their products and services in the country. Starting May 31st, no new account openings can be created on the Bybit platform for Canadian customers. Existing customers are given time to make new deposits and enter into new contracts until July 31st. Bybit also stated that customers will be able to withdraw or reduce their positions after the closing date. Bybit recently opened its global headquarters in Dubai and joined Binance, among other crypto exchanges, in exiting Canada due to an increasingly challenging regulatory environment. Included in the changes in the Canadian regulatory rules is the requirement for trading platforms to obtain approval from the Canadian securities administrators. However, despite the numerous exits of several crypto firms in Canada, some crypto exchanges still remain committed to operating in Canada. This includes Coinbase, which is actually doubling down on its operations. Coinbase is also known for praising Canada's new approach to setting out clear rules for crypto trading. Up next, we have two central banks entering into a collaboration on crypto rules and fintech development. The United Arab Emirates, or UAE, and Hong Kong central banks recently announced that they are going to be working together on crypto rules and fintech development. Both banks want to align their financial service sectors and shared that they have many complementary strengths. On May 30th, the HKMA, or Hong Kong Monetary Authority, stated that they had met with their counterparts from the Central Bank of the United Arab Emirates. Soon after the meeting, they announced that both central banks had agreed to strengthen cooperation on virtual asset regulation and developments. Both central banks also pledged to facilitate discussions on joint financial technology development initiatives and knowledge-sharing efforts. Along with the development of crypto rules and fintech development partnerships, the two central banks also discussed financial infrastructure and financial market connectivity between the two jurisdictions. According to the Central Bank of the UAE Governor, H.E. Khalid Mohammed Balama, he anticipates that the relationship with the HKMA will be long-term and ongoing. HKMA Chief Executive Eddie Yue also stated that the relationship between the two central banks will economically benefit both jurisdictions as they both share complementary strengths and mutual interests. Following the meeting, the two central banks held a seminar for senior executives from banks in Hong Kong and the UAE. The seminar covered various topics, which included cross-border trade settlement improvement and also exploring how various corporations in the UAE can leverage Hong Kong's financial infrastructure platforms, which will allow them to gain access to mainland China and Asian markets. In related news, Hong Kong's Treasury Chief Christopher Hui stated that crypto is going to stay. Hong Kong has allowed retail investors to trade crypto under its new regulatory rules. Hui also stated that the benefits of utilizing cryptocurrencies outweigh the risks. These new developments in Hong Kong and the UAE are primarily the reasons why the two jurisdictions are becoming increasingly popular among crypto firms that are moving their operations from the UK, US, and Canada. Several crypto exchanges have now filed applications in Hong Kong and the UAE. Bybit also opened up their new global business hub in Dubai and announced their exit from Canada. Moving on to other crypto news. The CEO of Coinbase, Brian Armstrong, has been hugely critical of the US's failure to provide the crypto industry in the country with regulatory clarity. The company has long argued that it will push more crypto firms offshore. The Coinbase CEO further stated that adversary nations, such as China, would ultimately benefit from the restrictive crypto policies in the United States. In a recent tweet, Armstrong again warned that while the recent turbulence in the crypto markets may tempt policymakers in the US to write off crypto as an unstable class asset, doing so will ultimately cause the US to cede its status as a financial leader and innovation hub. He also urged policymakers to see that crypto is about much more than individual transactions. He further argued that it carries transformative technology that can revolutionize a variety of sectors. According to him, crypto has the potential to modernize finance and numerous other sectors, from social media to supply chains. He added that the technology offers a faster, cheaper, more private, and more accessible platform. Through his status as a public figure and the chief executive of Coinbase, Armstrong has pushed for policymakers in the United States to provide regulatory clarity for crypto firms operating in the country. Through regulatory clarity, it would help crypto realize its potential while also protecting consumers at the same time. Armstrong also said that it was unsurprising when Hong Kong started positioning itself to become a global crypto hub. The move may be China's way of challenging the US's role as the global financial leader in a variety of ways. As an example, China recently launched the digital yuan. He also warned that failing to pass comprehensive crypto legislation in the US will result in the country playing catch-up and spending billions of dollars to bring back innovation in the US. He added that even a colossal and sustained effort might be too late by then. Despite Armstrong's criticism of US policymakers, he still remains 100% committed to the US market. Armstrong has a lot of faith that the US Congress will make a clear rulebook for crypto firms to follow. He made it clear that Coinbase will stay committed to the US since it's where he founded that company and where the rule of law always prevails. He also observed that there is strong bipartisan support for Congress to create new legislation that would lead to regulatory clarity for crypto. To wrap things up, Representative Warren Davidson stated that legislation to address the U.S. debt ceiling will block proposed taxes, including Biden's proposal to tax crypto miners by 30% for electricity consumption. On May 28, U.S. lawmakers released a draft of the bill that will allow the government to increase the debt ceiling. This followed negotiations with President Joe Biden and House Speaker Kevin McCarthy. Davidson stated that the bill blocked the proposed taxes, which included the 30% tax imposed on crypto miners. This tax had been included in the president's budget proposal for 2024. In a tweet answering a question, Warren Davidson stated that the administration's DAME excise tax proposal is blocked and mentioned it as one of the victories of the negotiations. These are the latest stories we have for you today. Again, I'm Ava from Ava Talks Crypto. Thanks for watching. Don't forget to watch our daily market report videos for an in-depth look at what's going on in the crypto market today.